Yes, so let's now look into another set of MCQs over there, right? We've already seen the MCQ and the correct and correct in the RTP Meet 20. Right now in this particular video, let us look into the MCQ and the correct and correct in the MTP Meet 20, right? That is the mock test paper for the Meet 20 exams issued by ICAI, right? So first we look into the MCQ and then after that the correct and correct. Okay, right? Let's begin. Right, TPR. So again, there is a case scenario first given over there. TPR and Associates have been appointed as the auditors of Octopus Limited for financial year 1920. Okay. During the course of audit, the auditor notices that there is a significant change in the number of debtors of the company. The auditor decided to check the debtors account in detail, right? So analytical said that there is a significant change. So auditor decided to check more in detail. Okay. Further, the company has made various provisions like provision for taxation, provision for bad and doubtful debts. Okay. Also, during the current financial year, the auditor attended the physical verification of the inventory being carried out by the management. Right? It is auditor's responsibility, to attend. That is the audit procedure for PhySIS. Auditor attended the physical verification of inventory to get audit evidence regarding the existence and condition of inventory in accordance with SA 501. Right, what is 501? Audit evidence, specific consideration for the selected items. Okay. Right. The auditor notices that there is no substantial change in the bifurcation of the amount of items representing the liability side of the balance sheet of Octopus Limited. Still, the auditor understands that he needs to check the liability side in detail. Okay. Right. You need to check both the asset and liability side. Further, the company has also recognized various income like interest income, dividend income, which auditor understands need to be checked in detail. Right, so auditor knows that everything he needs to check in detail. Debtors he should check in detail, liabilities he should check in detail, dividend interest income he should check in detail. The auditor is of the understanding that certain matters need to be reported under CARO. Right, so certain matters of reporting under CARO also. Now, based on the above facts, answer the following. Right, dash, dot is a possible obligation, right? So one, it could be a present obligation, or second, it could be a possible obligation. Here it says a possible obligation that arises from the past event and whose existence will be confirmed only by the occurrence or non-occurrence of one or more uncertain future events, not wholly within the control of the entity. Right, so the obligation, it says the occurrence of which will depend upon the occurrence, right? The existence of will be confirmed based on the occurrence or non-occurrence of one or more future events, not wholly within the control of the entity. Right, so it is beyond the control of the entity, and whether it is happening or not happening, whether that liability, that obligation will come or not come, it says it depends upon the occurrence or non-occurrence of one or more uncertain future event, and that too not wholly within the control of the entity. Right, so they've given the definition, we have to know the term over there. Right, so what is it? Is it a provision? Is it a reserve? Is it a contingent liability, or is it just a liability? Right, so anyways, liability and reserve is the out of question. Right, so what we need to select is between the provision and the contingent liability. Right, so what would be the correct option over here? The contingent liability. Why? Because it is future events, uncertain future events, not wholly within the control of the entity. Right, so that is what makes it a contingent liability. Okay. Next one. Which of the following is not correct with respect to the inventory held by Octopus Limited? And which of the following is not correct? Right, all inventory units held by the company should have been recorded and recognized in the financial statements. Correct. And a completeness, all inventory units held by the company should have been recorded and recognized in the financial statements. So whatever is the physical stock, accordingly should be the book stock. Okay. Any inventory held by third party on behalf of the company should not be included as a part of inventory balance. Client inventory lying with third party, it says don't include it in inventory. But though it could be lying with the third party, but it could be the inventory of the client which could be lying with the third party. Right? So this sentence doesn't seem to be okay to me, but I cannot conclude before I read the other two sentences. So right, let us read the other two sentences. Inventory should be recognized at cost or NRV, whichever is lower. Perfect. We always say that valuation of inventory, how it is to be done? Cost or NRV, whichever is lower. So this is correct. First one also correct. Now just let us read the last one over there. Inventory balance as at the year end does not include any element of the next year. Right? Obviously, it should not include any element of the next year. There should be a proper cut-off procedure and a segregation of transaction from one accounting period to another. And anything related to the current year should not be recorded in the preceding year or in the following year. It should be recorded in the current period only. Right, so inventory balance as at the year end does not include any element of the next year. Yes, it should not include any element of the next year, right? So even this statement is correct. What does the question say? Which of the following is not correct, right? So what is not correct over here? B is not correct over here. And any inventory held by a third party on behalf of the company should not be included as a part of inventory balance. No, it should be included as a part of the inventory balance, right? Is that good for everyone? Okay, next one. If the management of Octopus Limited refuses to allow the auditor to send the confirmation request to the debtor, oh, so now they've come to 505, external confirmation. And there we have a situation which talks about management's refusal to allow the auditor to send a confirmation request. And here what does it say? The management is of Octopus Limited. If they refuse to allow to the auditor, right, just a moment. Okay, now good. Right, refuses to allow to the auditor to send a confirmation request to the debtors. The auditor should. So auditor says that I want to send the confirmation request to the debtor, and client says, auditor, no sending confirmation request. Auditor says, okay, no sending confirmation request, bye, I'm going, withdraw from the engagement. Not listen at all to any request of the management. Huh? Did you say anything? Oh, I didn't hear anything. That type. Don't listen only. Remember, not to listen at all. Okay, then consider the management's request for refusal and assess its validity and decide the nature, timing and extent of his audit procedures accordingly. Seems more sensible. Then consider the management's request for refusal. Why? Why not to send the confirmation request to these debtors? Check for the validity of the reasons given by the management and also the impact on the nature, timing and extent of the other audit procedures. And agree to management request and proceed with audit of the other items of the financial statements. Not to check, no problem. Aage badho. Let's go ahead. And so it says not to check. You're saying we want to send confirmation request to debtor. Client is saying, management is saying, auditor, no, not to do that. You say, okay, not to no. We'll go ahead. No, you cannot just, likewise accept whatever the management is telling you. Right, so withdraw from the engagement is like an extreme step. Not to listen at all, very bad idea. Agree to management request and continue with the audit of the other items of financial statements, again not a sensible idea. Right, so what is a good way out over there? Consider the management's request for refusal, assess its validity and also decide the nature, timing and extent of his audit procedures accordingly. Next one, question number 4. Which of the following statement is not true? Sometimes they ask what is true, what is correct. Sometimes they say what is not true, what is not correct. And as far as the liabilities of a company are concerned, okay, liabilities are the financial obligation of a company including owner's funds. No, that actually doesn't come under liability, owner's fund. But let us see what are the other points. Liabilities include borrowing, trade payable, other current liability and provision. This I have no doubt about it. And okay, liability includes borrowing, trade payable and other current liabilities and provision. So this is so true. Verification of liability is as important as that of assets. Right, so equal. I said no, balance sheet. We need to check the assets also. We need to check the liabilities also. So this is also true. Okay, now only what is not true? Which of the following statement is not true? So one, it says all of the above is not true. Now that is not possible because we've already found that 2 are true over there. We've already found, we are pakka, we are sure about it. Okay, these 2 are true only over there. Borrowing, trade payable, other current liability provision are included, other current liability and provision is included under liability. And verification of liabilities is as important as that of assets. These 2 are true. So anyways, it cannot be D, all of the above. So the only option remaining over there is A. Right, so one way is to select the right answer, or other way is you identify the 3 wrong answers. In any ways, you reach to the right answer. So So one way you should know which is the one correct one, or you should know the 3 wrong ones, then automatically the balancing figure is the correct one. Okay, ठीक है. So liabilities are the financial obligation of a company including owner fund. वो sentence में गड़बड़ हो गया, because they've written that including owner's fund, right? That is not right over there. Right, fifth one. Confirmations as well as undelivered letters should be given return to the auditor and not to the client. Correct. Why? Because the entire control over the confirmation process should be of the auditor and not of the client. Right, the entire control over the confirmation process, right, the external confirmations is what we call it as, right, so the entire control should be of the auditor and not of the client. And when no reply is received, the auditor should perform alternative procedures regarding the balances. Correct. Right, main procedure, if main procedure not possible, then alternative procedure, and alternative procedure also unable to obtain evidence, then 705. But that is always the step. Main procedure, if not main, then alternative. If not alternative, then 705. Right, so when no reply is received, the auditor should perform alternative procedures regarding the balances. Yes. Confirmation as well as undelivered letters should be given return to the auditor and not to the client. Yes. Right, so 1 is correct, 2 is correct, 1 and 2 are correct, 1 and 2 are incorrect, right? So what is it over here? Both 1 and 2 are correct, right? So C is the correct option. Okay, now coming to the next one, right? Second case scenario over there. ABC Limited is the company dealing in products, namely chocolate and coffee. ABC Limited approached audit firm XYZ and Associates for the statutory audits of its financial statements for 2019. The gross turnover of the company is 105 crore, out of which turnover from one of its product, namely coffee, is of 95 crore, right? So chocolate is only 10 crore. Right, so because gross turnover is 105 crore, out of that coffee is 95 crore, right, during the immediately preceding financial year. During the course of audit, XYZ and Associates found certain delay in the payment of the Employee Provident Fund of ABC by ABC Limited. Right, so statutory dues, there is a delay in the payment. They understand that the same needs to be reported under the relevant provisions of CARO. Thus, undisputed statutory dues, the regularity of payment, and those which are outstanding for a period of more than 6 months, as on the date of balance sheet, from the date they became payable. Okay. During 1819, Mrs. X is wife of Mr. X, who is a partner in XYZ and Associates, acquires certain shares of ABC Limited. Also, relative is holding share, but how much shares relative can hold? Up to the face value of rupees 1 lakh, and that too only in the company. And if relative exceeds the limit, corrective action can be taken within the 60 days, and a grace period of 60 days given, but that is only for the relative, that is not for the person or the partner. Okay, the audit firm is of the opinion that this may call for a disqualification for the firm for being the working as the auditor of the company under the relevant provisions of the Companies Act. Further, ABC Limited also approached the auditor to provide them the investment banking services, to which the auditor denied as per the provisions of the Companies Act. Very good, auditor, you denied. And because investment banking services comes under section 144, auditor not to render certain services, right, to company, to holding and to subsidiary company, right, where he is appointed as the statutory auditor of the company. Otherwise, he will be disqualified under 143(3)(I). Okay, sorry, 141(3)(I). Right, during the course of audit, XYZ and Associates has reason to believe that an offence of fraud involving some amount, offence of fraud involving some amount has been committed in the ABC Limited by its general manager. The auditors understand that there is a requirement for reporting of fraud by the auditor under the Companies Act and the relevant rules. And 143(12), duty to report the fraud to CG, right? Duty to report the fraud to the central government. Based on the above facts, answer the following. After the appointment of XYZ and Associates, ABC Limited should inform the auditor and file a notice of such appointment and inform ADT1 with the registrar within 60 days, 30 days, 15 days, 20 days. So anyways, 20 days so is anyways offbeat over there. Right, not after 2 months of the appointment of the auditor. So 60 days also no. So maybe you might have a confusion over there regarding 30 days and 15 days. And also 30 days is when the auditor resigns. within 30 days from the date of resignation, the auditor has to file Form ADT3 with company and ROC, and in case of a government company also with the CMAG. There it is 30 days. But where the auditor has been appointed by the members, the company has to inform the auditor and the company has to inform the ROC within 15 days from the date of the appointment of the auditor, is in Form ADT1. Right, so company has to inform ROC within 15 days. Okay. Next one, Mrs. X acquires security exceeding the prescribed limit in ABC Limited. Then XYZ Associates shall take corrective action within dash days. What is the prescribed limit, right? So 100 days, 60 days, 90 days, 15 days. Market value 1 lakh, market value 1 lakh. So anyways, market value is out of question because there it is face value. Right, so A and D is out. Now left is B, C. So 50-50. Usme A and D out. Now we have only B and C over there. Right, so 60 days face value 1 lakh and 90 days face value 1 lakh. Right, so corrective period. Right, the corrective action, the grace period over there given is of 60 days. Right, so 60 days and face value is rupees 1 lakh. Okay. Under which section reporting of fraud by an auditor to the central government is required and what is the amount of fraud? Right, so 139.12 is so anyways not right. And so no, none of the above also. Right, so 143.12, 143.12 and then 1 crore and above and 2 crore and above. So there is no 2 crore and above over there. It is 1 crore and above. So none of the above also not there. Right, so A is the correct option. Right, section 143.12 and 1 crore and above. Right, next one. What is the requirement for ABC Limited as per the relevant provisions regarding maintenance of cost records? Right, when cost records become mandatory, when the overall turnover is 35 crore or more. And here in this given case study, the overall turnover is 105 crore. Right, so do they need to include cost records in their books of account? Yes. Right, so maintenance of cost records is mandatory in Form CRA1, maintenance of cost records is mandatory in Form CRA2, maintenance of cost records is mandatory in any general format, no requirement of maintenance of cost record. So no requirement, not a point. Is mandatory in any general format, not a point. So now CRA1 or CRA2. Right, so CRA2 is regarding the information regarding the appointment of the auditor. Right, so CRA1 is regarding the maintenance of the cost records. And a CRA1 is regarding the maintenance of the cost records. Under the relevant provisions of CARO, right, XYZ and Associates is required to report the extent of arrears of employee provident fund as at the balance sheet date for how many? 9 months, 3 months, 6 months or 12 months. Right, so no 9 months, no 3 months, no 12 months. It is exceeding 6 months, right? That is there under clause 7A of CARO. Right, 16 also and 20 also. Right, same thing for undisputed statutory dues, 2 points of reporting. The regularity of payment and those undisputed statutory dues which are outstanding as on the date of balance sheet for a period of more than 6 months from the date they became payable. Right, everyone watching the video so far? Right, so that means you're really serious about clearing your exams this time. I'm very happy for you. Wonderful. Chalo, aage badhte hai. Right, the auditor shall update and change dash as necessary during the course of audit. Right, so now the general MCQ, no case study based over there. Right, the auditor shall update and change overall audit strategy and audit plan, audit program. Right, so both strategy as well as plan can be changed as and when the audit progresses. Right, so B is the correct option. The auditor shall update and change the overall audit strategy and the audit plan as necessary during the course of the audit. Okay. Right. A request that the conforming party respond directly to the auditor, only if the conforming party disagrees with the information provided in the request. Right, so if it agrees or disagrees, when in both cases it needs to reply, that is positive confirmation request. And only if it disagrees when it needs to reply, that's an example of a negative confirmation request. And so non-response and exception to just anything, what till tak. है ना, जो लगता है वो जो मन में आता है वो लिख देते हैं क्योंकि उनको तो 4 ऑप्शंस क्रिएट करना ही पड़ेगा ना. They write whatever comes to their mind because they have to create the 4 options over there. No? है ना. तो non-response, exception, and then positive confirmation request or the negative confirmation request, right? So negative confirmation request, right? So negative confirmation request. Okay. Next one, direct financial interest or materially significant indirect financial interest in the client is an example of. The financial interest or materially significant indirect financial interest is an example of self-review threats. No, self-review is where maker-checker is violated. Advocacy threat? No, advocacy threat where you are dealing with the shares or promoting the shares of the entity. Intimidation threat? No, where you are put under pressure by the client. And you are threatened by removal, you are threatened by replacement, you are threatened with litigation. That is intimidation threat. Right? So it's not self-review or advocacy or intimidation threat. Here it would be the self-interest threat. And a direct financial interest, boss ma question mein hai na interest. So obviously this has to be a self-interest threat. Yes. All okay now? Okay. Right. So direct financial interest or materially significant indirect financial interest in a client is an example of a self-interest threat. Okay. Next one, if the auditor is unable to obtain sufficient appropriate audit evidence regarding opening balances, so boss, let it be anything, but here they are saying unable to obtain evidence regarding the opening balances, and SA 510. Right, you performed your audit procedures for the opening balances, but you're unable to obtain evidence regarding the opening balances. Disclaimer, qualified or disclaimer as appropriate in accordance with 705 or unmodified opinion. Now unmodified the shakyats nahi, because you are unable to obtain the evidence regarding the opening balances. So as per SA 705, depending upon the pervasiveness, you may either issue a qualified or you may issue a disclaimer of opinion. So not that it has to be disclaimer or it has to be qualified. It could be qualified or it could be disclaimer. So a qualified opinion or a disclaimer of opinion as appropriate in accordance with SA 705. Next one, fifth one, if as a result of misstatement resulting from fraud, we are talking about the fraud. Yes, auditor has come across some fraud. Right? The auditor encounters exceptional circumstances. This is what we always discuss in the chapter of fraud and the 240 discussion over there. Right? The auditor encounters exceptional circumstances. Now what to do? Client ke yahan to fraud hai. That type of a situation. The auditor encounters exceptional circumstances that bring into question. There is a question mark. Auditor says, now what to do? Bring into question the auditor's ability to continue performing the audit. One, it says, bhag jao, withdraw from the engagement immediately. Report to audit team regarding withdrawal. What is this point? And report to audit team regarding withdrawal. Let's say you're telling everybody, pack your bags, we have to go home. That type of a situation. Determine the professional and legal responsibilities applicable in the circumstances and ask the management for his withdrawal. What is this? Ask the management for his withdrawal. Where will management go after withdrawing? You're telling management to resign. No. So ask management for withdrawal? No. Report to audit team regarding withdrawal? No. Withdraw from the engagement immediately. First run away or first determine your professional legal responsibilities as applicable in the circumstances. Obviously, first you need to determine your professional legal responsibilities as applicable in these circumstances, right? And then later on you can consider whether withdrawal from the engagement is necessary. But right now we want the first thing which you will do. Right? So what is the first thing which the auditor should do? C point. Determine the professional and legal responsibilities which are applicable in the circumstances. And determine the professional and legal responsibilities which are applicable in the circumstances. Right, so that covers our correct MCQs over there, right? And now coming to the correct and incorrect part of the questions. Right, so examine with reasons in short whether the following statements are correct or incorrect. So I told you, sometimes they say true or false, sometimes they say correct and incorrect. Right, the auditor is expected to and can reduce audit risk to zero, big zero. Right? Is this point right? The auditor is expected to and can reduce audit risk to zero. Boss, if we are able to reduce audit risk to zero, we will be able to give absolute assurance. But what we give in an audit is only the reasonable assurance that financial statements are free from material misstatement. So can the auditor reduce the audit risk to zero? No, due to the inherent limitations of an audit. And the evidence obtained by the auditor is mainly persuasive rather than conclusive in nature. Right, so the objective of the audit is to obtain a reasonable assurance, right? So 200 ka overall objective about whether the financial statements as a whole are free from material misstatement. In auditing, reasonable assurance can be given, which is a high level of assurance but not an absolute assurance. Okay, the auditor is not expected to, it says it's not even expected from you. So see, we are not even expecting that you get 100 out of 100 in audit. You at least get 50 out of 100 in audit. You'll say, ma'am, 40 is also more than enough in my case. So that is your case. No, but I am talking about generally. Okay, all subjects you should get 50, 50, 50, 50. Means life is safe over there. You know? So in that case, 200 out of 400. Anything, the more the merrier. But this is like minimum what is required. So the auditor is not expected to. So I am telling you, a student is not expected to get 100 marks in an audit paper. But yes, we can expect a good amount of marks by the student in the paper. Right, anyways, the auditor is not expected to and cannot reduce audit risk to zero and cannot therefore obtain an absolute assurance that the financial statements are free from material misstatement, whether due to fraud or error. Why? Why, auditor, you cannot reduce the risk to zero? Why you cannot give absolute assurance that the financial statements are free from material misstatement? It says this is because there are the inherent limitations of an audit. So it's like a short story they've written over there. And because it is short story, they've not written that the evidence obtained is persuasive rather than conclusive in nature. Okay. Right. Coming to the next one, easy one and a numerical one. SQC1 requires engagement partner to establish policies and procedures for the timely completion of the assembly of the audit file, the final preparation, touch-up of the audit file. An appropriate time limit within which to complete the assembly of the final audit file is ordinarily not more than, yes, did you catch the thief? Did you catch the thief over there? Not more than, right, what is written over there? 30 days after the date of the audit report. What is it? 60 days after the date of the audit report. Right, so SQC1. Right, now what is given over there in the question? They have given requires engagement partner to establish policies and procedures. No, engagement partner, his role comes in SA 220. In SQC1, we always talk about it at the firm level. At SQC1, we talk about it at the firm level. In SA 220, we talk about it at the engagement level, at the audit level. Right, so what does it say? Requires the firms to establish. So not engagement partner, requires. So that's another thief over there. And requires firms to establish policies and procedures for timely completion of the assembly of the audit file. An appropriate time limit within which to complete the assembly of the final audit file is ordinarily not more than, right, is ordinarily not more than 60 days after the date of the audit report. Okay, third one. It is important for the auditor that each party should be clear about the nature of the engagement. Yes, absolutely important, absolutely correct. It is important both for each party. Who is the each party over here? The auditor and the client. That each party, both auditor and the client, should be clear about the nature of the engagement. Right, so we copy the sentence again, only we write yes, both for the auditor and the client. And further we say it must be reduced to writing. That is, it should be in writing, the engagement letter, and should exactly specify the scope of the work. Right, so it should be reduced to writing and it should also exactly specify the scope of the work. Okay. Next one, fourth one. If the auditor is unable to obtain sufficient appropriate audit evidence regarding opening balances, again they are behind opening balances. You know what we had seen in the MCQ, if you are unable to obtain evidence regarding the opening balances, QO or DO. and a qualified opinion or disclaimer of opinion as may be appropriate. Now here what new idea they got? If the auditor is unable to obtain evidence regarding opening balances, the auditor shall include an emphasis of matter paragraph in the report. No emphasis of matter paragraph, qualified opinion or disclaimer of opinion as appropriate in accordance with SA 705. If the auditor is unable to obtain sufficient appropriate audit evidence regarding the opening balances, pay attention, don't look here and there, unnecessarily don't keep on moving the cursor here and there or try to check what are the recommendations of the other videos which are there. फिर अभी ये मैम का ये वीडियो होने के बाद next I will click that video or in between going over there. No, राह से भटकना नहीं है. You're not supposed to go off track, be on track. Right now seeing this video, do full screen for this video only so that you don't get any other recommendations or any other suggestions also. Okay. Right. So if the auditor is unable to obtain evidence regarding the opening balances, the auditor shall express a qualified opinion or a disclaimer of opinion as appropriate in accordance with SA 705. Wonderful. Okay, just a moment. Right, next one. Managing Director of Pigeon Limited. Oh, right. Himself wants to appoint. Managing Director himself wants to appoint CA champ. You say, ma'am, when I'll become CA, I'll be that CA champ. Okay. A practicing CA as the first auditor of the company. Ouch. Right? Who can appoint the first auditor of a company? The board of directors, not managing director. Board of directors within 30 days from the date of registration of the company. So section 139 subsection 6 of the Companies Act 2013 lays down that the first auditor of a company shall be appointed by the board of directors within 30 days from the date of registration of the company. And the first auditor shall be appointed by the board of directors within 30 days from the date of registration of the company. In the instant case, the proposed appointment of CA champ, a practicing CA, as first auditor by the managing director by himself is in violation, nice wording, no? Is in violation of section 139(6) of the Companies Act 2013, which authorizes the board of directors and not managing director, the board of directors to appoint the first auditor of the company. In view of the above, the managing director of Pigeon Limited should be advised not to appoint the first auditor of the company. Right? Not to appoint the first auditor of the company. Right? So these are like mini case studies asked over there. Right. Next one. Let me just check. Okay. Worked. Right. Article 150 of the Constitution, whatever it be, provides that the accounts of the Union and of the state shall be kept in such form as the finance minister may on the advice of the CNAG prescribe. So from where this finance minister has come over there? It says Article 150 of the Constitution provides that the accounts of the Union and of the state shall be kept in such form as the anything related to government accounts, always who looks into it? The President. Who appoints the CNAG also is the President of India. So no finance minister. And what does it say? In such form as the finance minister may on the advice of the CNAG prescribe. So again incorrect. No, it is by the President. Article 150 of the Constitution provides that the accounts of the Union and of the state shall be kept in such form as the President may on the advice of the CNAG prescribe. Right? President may on advice of the CNAG prescribe. Okay. LLP need not file a statement of accounts and solvency. Again incorrect. Right? LLP has to file a statement of accounts and solvency with the registrar every year. Right, LLP shall be under an obligation to maintain annual accounts. Right, so one, LLP is under an obligation to maintain annual accounts to reflect true and fair view of its state of affairs. A statement of accounts and solvency in the prescribed form shall also be filed by every LLP with the registrar every year. Right, and the last one over there. Depending on how the business operates, the management may value inventory using weighted average basis. And what about the other one? Because as per the accounting standards, two are allowed. No, weighted average or FIFO method. LIFO not allowed, but FIFO or weighted average, any one out of the two. Right, so depending on how the business operates, the management may value inventory using first in, first out, that is FIFO or the weighted average basis. Right, FIFO or the weighted average basis. Right, so if you look at it, coincidentally, all the 8 points are incorrect only. Right, so everywhere you have to keep on correcting कि ऐसा नहीं है, it is not like that, and everywhere you have to keep on explaining, justifying the same. Right, so that completes our discussion on the MCQ correct and correct, right, for the MTP May 20, right. So we'll see something, right, see some other MCQs in the next video, right. Thank you so much.